Yeah. I don't see your picture. Okay. All right. So I'll start then, I guess. Hey, George. I can see George there. How's it going? I think we're just waiting for a few more people, so we'll just hang tight. Nav, Faye. All right. Thank you for joining on a Sunday afternoon. Derek, hi, Derek. Which Derek is it? We got a couple of Dereks. Ah, yes, Lorenko. Excellent. We'll just wait a few more minutes while we get everybody logged up. Hi, Peter. Bruce. Hi, Nicole. We had to do the session on a Sunday because if we did it during the week, the markets are open, so that might be too distracting for you guys. We couldn't do it next Sunday because next Sunday I heard a Super Bowl, so that won't be good either. So just waiting for a few more minutes till we get everybody on. I didn't, Sean. All right, so let's get started, and if anybody comes late, that's fine. So, anyways, the topic of today is a little bit different. We are a real estate tax firm, but a lot of our clients have been doing well in real estate, and they've been diversifying outside of it. I remember when the pandemic first started, clients were asking about investing in stocks and talking about stocks and should they open up an account. And some people have opened up an account, and some people even did some stock options, and some even opened up corporations. And when we did their 2020 tax returns, it was very happy to see that a lot of people made a lot of money. And of course, when they make a lot of money, they got to pay a lot of taxes. And so we were basically trying to figure out a way to see if we can minimize their taxes. But anyways, let's share some of the stories. So a lot of our clients have invested in stocks. That's a good thing. A lot of our clients have invested in options. That's a good thing. And the stock market, as you can remember, the past 2 years have been doing very, very well. Some people even took training courses in just like real estate investor courses like KeySpire. They've been taking some stock trading courses, and they've been following their stock advisors, and they've been doing very, very well. So that's a good thing to see. So we want to congratulate those clients that have done well and started, and those who are just starting or thinking about starting or thinking about the next move. I think this session today will be very helpful. I'd like to share one quote with the client I had 2 years ago talking about stocks, and he compared it to real estate. And this client was a very good real estate investor. He did very, very well. And he said, if I invest in real estate, if I want to double my real estate investments, I've got to double my efforts. In some cases, more than double my efforts, because financing goes to a certain level, right? You have financing, the leg of the financing is easy, but if you want to get more and more money, it's going to cost you a little bit more and more effort, maybe higher interest rates. You got to find a joint venture partner, blah, blah, blah. And he said something that was really nice, which is, but if I invest in stocks, I can double my investment without really doubling the efforts. So, in economics, we call that economies of scale, right? So the thing about stocks, and the good thing about stocks, is that you can actually double, triple, you can expand simply by buying twice as many shares, 3 times as many shares, et cetera, et cetera. And it doesn't cost you, doesn't require double the effort or triple the effort. So that was a good observation and a good, a good point. And that's one of the good things about stocks, is it gives you, my favorite word, it gives you the flexibility, liquidity, right? So that's what stocks and options and financial assets can do. Unlike a real estate property, it's a discrete big chunk of money that sits there and requires a lot of effort, not just buying, but continuing to service that property. Selling is another thing. And you got also gigantic amount of transaction costs, right? So the thing about stocks is it's scalable. You can double, triple without doubling, tripling your efforts. And it's got very low transaction fees, right? So that's the thing that it's interesting about stocks. And, when people start investing in stocks or thinking about investing in stocks, you guys are the experts, right? Our firm I think 2 years ago, right in the pandemic, we gave our regular conservative accountants advice, which is don't short the stock market. Do not short the stock market, right? And we didn't go out and say buy stocks, but we said don't short the stock. So that was a safe and a very, very valuable piece of advice that our firm gave to all of our clients. It's in the webinar that my partner Dave presented. Very, very valuable advice, and certainly would have saved you a lot of money if you would have thought that the market would have fallen, as many people thought at the beginning stage of the pandemic. But anyways, let's get down to the basics. So if you want to invest in stocks, how does it work, right? It's the same thing as real estate. You buy stock. So here, let's take a look at the slides here. I'll go through this very quickly, and we'll try to give you guys a chance to ask questions. I think that's the best way to do this kind of presentation. So, buying a stock is just like buying a property, right? So you buy a stock, you got your purchase price, that's the cost base. And then you sell the stock, that's your proceeds of disposition, minus transaction cost, which is very little, okay? And that'll be your capital gain or your capital loss, okay? So just like real estate, the gain is going to be taxed at 50%, okay? 50% taxable, exactly like real estate. And exactly like real estate, the question then becomes, is the gain going to be capital or business income, right? And this is where it gets interesting, because if all you guys are doing is investing in stocks through your RSPs, for example, then this is not an issue, right? You just put it in RSPs. If it doubles, if it triples, all of that is tax sheltered until you cash the RSPs, and then all of that is taxable. But outside your RSPs, the question is it a capital gain or is it income, right? And capital gains is 50% taxable, but income is going to be fully taxable, right? So if your trading in stocks constitutes income, then it's like making money from your T4 income, right? And so that's going to be fully taxable, right? So if you're just investing through a brokerage account outside your RSPs and you're a light investor, fine. It is what it is. You buy, you sell, you make some money, you lose some money. That's all it is, right? But the interesting part and the interesting issue will be if you can change the structure of your trades so that it constitutes business income. Now, why would we want to do business income if it's all going to be taxable? Well, with all this extra money you guys are making from real estate, and you start investing in stocks, just like we say with real estate, what do we say? We say, let's structure your real estate investments. Let's put your real estate into a corporation. Why? All the reasons that we've already discussed that we don't have to repeat here, right? Put the real estate in a corporation for all of the reasons that we've already stated. Same goes for stocks, right? If you're going to invest in stocks, the worst case scenario, if you put your stock investments in a corporation, is it'll be taxed the same way as it's taxed in personal hands. So the worst case scenario is it's going to be 50% taxable, same thing as if it's personal, right? But if you can structure your stock trading such that you become a let's say day trader, or let's say business income, then all of a sudden that capital gain is income, and that income will be taxable at the small business rate, right? You get the 12% taxable corporate tax rate. So if we can somehow say your stock trades, your stock investments is going to be income, instead of doing it in your personal name, you put it in a corporation, now it's active income, and it will be taxed at the corporate tax rate of 12%, 13%, thereabouts, right? Just like we say in real estate, if you're going to flip properties, don't do that in your personal name, because that's going to be income taxed at your marginal tax rate, which will be a lot higher. Put it in a corporation, taxed at the lower rate. So it's the same thing. So what we're saying is, if you're going to invest in stocks, trade stocks like a business, put it in a corporation. Okay? So what is the criterion for that? Okay? The criterion here, as you can see, would be things like, and these are just some of the factors, is frequency of transactions, period of ownership, knowledge of the securities market, time spent, financing, blah, blah, blah. Basically, if you're going to put it in a corporation, and if you're going to have your stocks treated as income, we want to make sure that you fall under the characteristic of a trader, right? So we want to make your stock trading like a business, right? So that means you want to do more trades. You might want to do more sophisticated trades, short-term trades, things that show the CRA that you're after the quick profit rather than the long-term capital gain. Same thing with real estate, right? If you want to get the business income component for flipping properties, you have to show that you're flipping properties, and that follows a set of conditions, okay? So that's what we're basically saying, and that's basically our selling point, which is put it in a corporation. Now, do you have to set up a different corporation? Can you do it in your existing corporation? So the answer, of course, is that in a corporation, you can do many different activities. So you can just do it in your existing corporation. So whether you have a consulting corporation, you can trade stocks. Whether you have a real estate corporation, you can trade stocks. So you can do that within your existing corporation. Or you can set up a different company. Or you can use your parent company that's not doing anything, right? A lot of you guys have a corporate structure where there's a parent company where you guys are the shareholders of the parent company, and that parent company will own the real estate company, right? You can put it there. Your parent company doesn't do anything. It's basically there to hold the shares of your other corporations. And as we say, it's there so that when your real estate corporations have excess cash, you dividend the money up to the parent for safekeeping, because the parent company doesn't do anything, and therefore that cash is safeguarded, right? You don't want to have too much cash in your real estate corporation. So if you were to invest in stocks in your real estate corporation, then your asset protection is somewhat at risk, because all of that money generated by real estate, it's now in stocks, it's in the same corporation, so you have the risk. So you may want to consider using your parent company or a different corporation to invest in your stocks if it's going to be income, okay? So that's something to keep in mind. Some clients don't want to do that because if you use your parent company to trade stocks, then that company becomes an active company. And so the fees that you have to pay for filing those parent company taxes will be higher. So there's always going to be that cost benefit. So, but if you're investing in real estate or if you're investing in stocks, you're making money. So the filing fees, I don't think should be an issue. Okay. The bookkeeping aspect of stocks, right? So it's very simple, like we said in the slide here, the very beginning. It's very simple. You buy a stock, that's the cost base. You sell a stock, that's the proceeds, and the difference is capital gain, right? So that's pretty simple. But the reality for stocks is it doesn't really work that way. If you're a trader, you're going to probably buy some shares, buy some more shares, buy some more shares, sell some shares, right? So you're probably not going to buy 100 shares of Facebook and sell 100 shares of Facebook. It's not going to be that clean. You're probably going to buy 100 shares of Facebook, then buy another 100 shares of Facebook, then buy another 100 shares of Facebook, sell 50, buy 75. And so the quantity of shares that you have for any given stock is going to be fluctuating. It probably will never be at zero. So since you're always buying and selling, and you might always have some, you don't sell your entire position, you're adding, selling, extracting lowering your position, expanding your position. The bookkeeping aspect of it requires you to do more than what the CRA spits out. The CRA spits out the T5008 automatically for every stock trade, and that's not going to be useful if you're a stock trader, right? Because we need to have your adjusted cost base. So the way the bookkeeping aspect of it that has to be considered is the moving average, right? So for those of you who are already investing in 2020, when we did some of your taxes, we ran into that issue. You have to find the adjusted cost base on a moving average basis. So that basically means if you buy 100 shares of Facebook, that's easy. Now you buy another 100 shares. Now you have your total cost divided by 200 shares. Then you buy another 100 shares of Facebook. Now you have, your total cost divided by 300, and that's going to be your cost base. So it's a moving average, right? And then when you sell the shares, your proceeds of disposition will be the sale price. Your adjusted cost base will be that moving average, okay? So that means to say your bookkeeping has to be a little bit different. So my understanding is that some stock brokerage accounts give you that information, right? They give you what the average cost base is, so you can calculate the capital gain or loss or the business income, okay? So that's something to keep in mind. And then, of course, just like with real estate, there's all sorts of interesting ways to make money from real estate. The stocks is the same thing. There's all sorts of interesting ways. And some of you guys might have been doing this already or learning about it, which is the stock options. Just out of curiosity, how many people are doing stock options? Puts and calls. All right, the derivatives, what Warren Buffett calls the financial weapons of mass destruction. And so, again, we are the accountants. So we're not going to give you our opinion, our advice, or strategies. We're going to just simply tell you the tax implications. Okay? So if you buy puts and calls, if you are long, the terminology is called long. Long means you're buying it. If you're buying puts and calls, then it's treated the same way as you are as you're buying the shares. So if you're long the puts and calls, if you're buying a call, if you're buying a put, and then you sell the put, and then you sell the call, it will be treated the same way as if you bought the share and sold a share. Okay, that's the general CRA guidance, interpretation. Okay, if you are the opposite of buying and selling, now with real estate, you can't really do this. With real estate, you buy a property and then you sell a property. You can't sell a property and then buy a property, right? So, but with options and stocks, you can do this. So you can sell a call, which is what they call writing a call. So that means you don't have the call, right? You don't have a call, or you don't have a put. You sell the call and you sell the put. Again, we won't get into the lesson on what a put and call is. Either you know it, which in this case it'll be useful, or you don't know it, which I think you might learn about it and you'll still find this helpful. If you are selling a call or selling a put, and if it's covered, that's another word they use in the language of stock trading, covered. If it's a covered call or covered put, then it will be treated the same way again as you are reporting your stocks, your actual stocks. So I'll give you an example. If you buy shares of Facebook and you sell a call option on Facebook, so that's called a covered call, and then at the end of the period, the Facebook shares exceed that strike call price, and you therefore sell your Facebook shares, the call price, the call premium will be treated the same way as you treat your Facebook shares. Okay, so very simple. So the bottom line, if you're selling a call covered, or if you're selling a put covered, then that will be treated the same way as your underlying share of Facebook. I'll just keep using Facebook because everybody knows it. It just reported results last Thursday and it fell 30%. So it was probably headline news for a lot of people. So we'll just keep using Facebook. So that's what happens if you sell a covered call or a covered put, is it operates the same way as you treat your shares. Next, if you sell a naked call or a naked put, which basically means there's a lot of risk, right? The term naked in options basically means there's a lot more risk to it. So if you're writing calls and puts on a naked basis, uncovered basis, then the CRA's position is this is income. Okay? The CRA says that's not going to be capital, that's going to be income. Okay? So naked calls. So again, let's take Facebook. Let's suppose Facebook was trading at $330 on last Wednesday. So if you were to sell a Facebook call at $330 strike price, and you would have gotten a nice premium, let's say $15, you got $15 premium on the Facebook 330 call. Then on Thursday, Facebook reported its results. It fell from $330 to $240, a gigantic drop. So your call premium of $15 would have been worthless, but you sold it, which is great. So your $15 call that you sold is now worth nothing. So you made $15. That $15 is income. Okay, that would be a naked call. If you did not own Facebook shares, you sold a 330 call, Facebook reports results, it went to 240. Your $15 call would have been totally out of the money. It would have been worth nothing. And therefore your call premium of $15 gets treated as income. Naked call, income. Naked put, same thing, income. On Amazon, let's take Amazon as another example. Amazon reported results on Thursday. Thursday before the close, Amazon market price was about $2,700. If you were to sell a put on Amazon, let's say at $2,700 put, it then reports results. On Friday morning, Amazon went up to about 3,000, closed at about 3,200. Your put option, the one that you wrote, the naked put, is worth nothing. would have been worth nothing. So the premium you got on the sale of the put would be entirely income. Okay? So let's see here. We got a question from Matthew. What does the income mean? Income means if it's in your personal name, it's as though you made money from your job. Income, business income, is as though you made money from your job, T4 income, right? As opposed to capital gain, which is only 50% taxable. Sounds good, Matt? Okay. Finally, shorting stocks. So shorting stocks, again, is another thing that people can do. If you think a stock is going to fall, you short the stock. You can short the stock. Shorting the stock means you sell the shares that you don't own, so you have a negative position. You sell it, you short it, you get the money, and at some future date, you got to buy it back. So if you short stocks and you make money, that's income. Okay, so let's recap. Very simple. Stocks, you buy, you sell, capital gain or income, right? Options, buying calls, buying puts follows your treatment of the stocks. So however way you treat stocks is the way you treat the call and the put. Covered call, covered put, same thing. It follows how you record your stocks. So however way you record the stocks is however way you record the covered calls or covered puts. Naked, uncovered calls, uncovered puts, income. Shorting stocks, income. Okay. Any questions so far? Again, it could be totally over your head. If you haven't heard of calls and puts, that's a 2-hour discussion right there just to explain calls and puts. So we're not going to go into the explanation of calls and puts. All right. What else can we say that's interesting? There is an election on this page here. The CRA allows taxpayers who trade in Canadian securities. When will we talk about crypto? Very soon. Very soon. There is a law that says if you trade in Canadian securities, you can elect to have all of your Canadian security transactions to be capital gains. So it says right over here on the slide, every Canadian security owned is deemed to be capital property in those years, owned in those years. Every disposition of Canadian security is deemed to be disposition of capital property. You can make this election. It's called T123, election of disposition of Canadian securities. You can elect to have all of your Canadian stocks, no matter whether you're a trader or not, to be capital in nature rather than income. So that's interesting. These elections are always interesting because situations change. But once you make that election, you cannot reverse that election. Okay. So we talked about gains. We talked about the bank statements, the T5008. We don't like that. Not if you're a trader. We want to have you to calculate the gains and losses on a separate spreadsheet using the moving cost, the moving average cost. Matthew is saying, why would I do this? Why would I choose this? You would choose it if you want to have it treated as capital versus income. If you're trading Canadian securities and you don't want to be treated, you don't want the gains to be treated as income, you make the election, and now you can treat the Canadian securities as capital. Okay, so here we go, crypto. So we get a lot of calls this year, obviously, about crypto trading. And every time I get the call for crypto trading, I have to listen to the client talk for half an hour. And he's all over the place. He or she's all over the place. talking about this and that, my wallet, my Binance, my nodes, my NFTs, all this new language comes into play, and it seems like a whole new world. Well, crypto is a whole new world, and they got a whole new language. But at the root of it, it's the same thing as stocks that we just talked about. Okay, so there's no difference. So if you were to buy Bitcoin and then you sell Bitcoin, same thing as buying Facebook and selling Facebook. Okay, if you loan out Bitcoin and you receive some interest on it, there's a different terminology that they call it, but if you receive some money for loaning out that Bitcoin, then that's interest income. Okay, so the quick answer to the question, when are we talking about crypto and what is the tax implication, is it's the same thing as stocks. If you are investing in Bitcoin, Ethereum, or all the other kinds of coins out there, it follows the same principle. Are you trading Bitcoin? Are you a trader? If so, it's income. It'll be taxed at your marginal tax rate, just like you earn T4 income. If you're not trading Bitcoin, right? If you're not trading Bitcoin, then it will be, if you sell it, it will be capital. Okay. How credit put spreads are taxed. That's too advanced. So we will put that. Andrew, we'll talk about that together, you and I. Trevor, I thought the whole idea of crypto was secret in terms of ownership. Yeah, it may be secret, but at the end of the day, if you bought it and you sold it and you made money or lost money, there's a tax implication. So it's up to you whether you report it. We think you should report it. My understanding is a CRA is able to get the information from the crypto from your account and find out what you're doing. But I think the reality that we know is this: to decipher all those trades and to calculate it all would be, it's hard enough for you, the investor, to do it. It's hard enough for us, the accountant, to do it. It's going to be very, very hard for the CRA to do it. So I think that is something that we can agree on. And because of the nature of the crypto trades, and when the client calls a half an hour, he's talking a half an hour. My approach now is, please stop talking. Don't say anything more. We need you to send us your trades. Send us a spreadsheet of your trades. Send us an explanation of your trades. We will look at those trades. We will talk to you on the phone, and we will decide how to treat those trades. Okay? And so if the clients are calling and asking questions and talking for a half an hour, you guys might also have the same question. How do you record all this stuff? So let me jump a few pages here, actually right to the very end, I think, is this website. So our firm, to expedite the calculation of the capital gains or the gains and losses on the crypto trades, we use this website, tax.crypto.com. And so we encourage you guys to do it. And so this might save the trouble of you guys calling us and asking us and wondering what to do, because all of your trades are just too much. It's not like stocks. It's a much more elaborate way and different way of doing things. And so I'll give you an example. So one of our clients, he's got all his trades going through, and basically what it is it's trading one coin for another. Mining is the same thing. Mining is the same thing. It'll follow the same principle. But it's a bit more complicated. Let me see here. I got some questions here. What percentage allocation would you consider diversified, and what aggressive in crypto and option trading? Well, that's business decision. What allocation would you consider diversified? That's a business decision. Depends on your overall situation. So, can you deduct the losses in your crypto in your taxes? Capital gains can be deducted against capital losses. Business non-capital gains or income can be deducted against non-capital losses. So yes, so you can deduct it. Trevor, what you can afford to lose? Yeah. That's the big question, right? That's the big question. That's what Warren Buffett said. He goes, my entire job is capital allocation. That's his whole job. So it'd be crazy for me to say, well, the percentages for allocation is this and that. Can't answer that question. It's a big question. Okay. So Crypto.com is the website that everyone should use to figure out your gains and losses on the trades. Because going back to my example, the client is basically trading one coin for another. So Bitcoin for Ethereum. I'll just use those two because those are the most common ones, even though they're probably the most expensive and people are trading other ones. But Bitcoin for Ethereum, those are trades, right? So in stocks, it doesn't work that way. You sell Facebook, you buy Amazon. You sell Amazon, you buy Google, right? It's no such thing as you swap Facebook for Amazon. It doesn't happen that way with stocks. But with Bitcoin, it's Bitcoin for Ethereum, trading all the way through. So obviously, if you're trading Bitcoin for Ethereum, that's different than stocks. And that's why you have to use this website to figure out what the cost of the trade is. So if you're trading Bitcoin for Ethereum, you are selling Bitcoin to buy Ethereum. So therefore, you have to figure out what did you sell Bitcoin at? Therefore, you have to find out what was Bitcoin trading at that second, right? At that second, and therefore you have to use this program. So if you're trading one coin for another, that is a sale and a purchase. And the sale of Bitcoin is going to cause capital gains or losses or gains and losses. And then you've purchased Ethereum, and that will be your cost base for Ethereum, et cetera, et cetera. What do you think about stocks that give out dividends? Sure. Stocks that give out dividends are usually less volatile. Stocks that give you dividends are taxed at a very, very special rate, very, very low rate. So you can, we always say at our firm, consider paying yourself in dividends. The magic number that we like to use is $40,000 of dividends, assuming you have no other income, is $1,500 in tax. A very nice, easy way to think about things, and it's very low. $40,000 in dividends, you pay about $1,500 in tax. But with stocks, the dividends are even lower because with stocks, they are what they call eligible dividends. So if you look it up, you have eligible dividends, non-eligible dividends, and these are eligible dividends, and so therefore the rate's even lower. So if Derek, what you're saying is a good idea to buy dividend-paying stocks and keep accumulating them, and then maybe one day living off of them, if that's what you're thinking, the answer is yes, absolutely. Sean, if I'm buying Bitcoin and holding, do I report when I sell or report each year of accumulation? If you're buying and holding, you are an investor. And if you're buying, which means you're buying one and you're buying another one and you're buying another one, you have to find the average cost base. And if you're buying, that means you're not selling. Do I report when I sell? Yeah, you report when you sell. Do I report when I sell or report each year of accumulation? You report it when you sell. So long as you're accumulating, no problems. Like if you're buying houses, you keep buying houses, you keep buying stocks, you keep buying Bitcoins, same idea. George, is your SIN number required to open up an online account? No. This is why people get, I think people know deep inside that they can probably get away without, or it's hard to track. I won't say the word you can get away, but it's hard to track this stuff. And this is the beauty of it all. So you don't need a SIN number. Trevor, what is your approximate tax on $125,000? Low. Send me an email, Trevor, and I'll tell you that. Low, very low, which is the good news. Nick, can you deduct expenses for mining Bitcoin? Yeah, you can deduct expenses if your Bitcoin activities is business income, right? The second part of mining, let's talk about that through an email, Nick. So Nick, looks like you're more on the heavier duty side of Bitcoin. So that's the thing about Bitcoin. I think there's nothing too special about it. I'll flow through these slides quickly here. So for tax purposes, right here, the taxable events. Obviously, when you sell crypto, when you trade one crypto for another, if you give it as a gift, if you use it to buy things, all of these things are taxable events, right? If you use crypto to pay for something, then that's a deemed disposition. Okay. Phase investing. How do I claim? 1 second here. Let me go back to Faye's question here. For investing courses, how do I claim that on personal tax return membership training? Yeah, there's a spot on the personal tax return that you can claim training for investment counsel. You can claim that as an expense. For Trevor, has there been any case studies with CRA and the courts and crypto yet? Not too sure about that one. Matthew, what option am I allowed to trade through TFSA? TFSA, you can trade options, but you can only buy and then sell. You cannot sell then buy. So you can buy a call, sell a call. You can buy a put and then sell a put. So you can do that through the TFSA. Be careful not to use your TFSA account as a trading account, because TFSA is for savings, not meant for trading. So you might get caught by the CRA if you trade through the TFSA. Is a T statement issued, a T5 for crypto? I don't think so. Okay, so if you receive crypto for your services, then that's basically, it's like you receive cash. Okay, so if you receive, someone pays you in crypto. A client called us last couple of months ago. He says one of his clients is going to pay him in crypto. Okay, fine. And that means whatever the value of the crypto is when you received it, that's going to be what you received as income. Okay. Trevor, if I did a TFSA withdrawal last year, can I make it back up this year? The regular contribution? I don't think you can do that. It's like RSPs.
TFSA replenishes.
Sorry, I take it back. You can. Addie, is any tax advantage if I report crypto under my corporation instead of personal? Yes. So this is our whole idea here. As I look at the time, time flies. But here, the bottom line is the argument that we made at the beginning is the argument we're going to make at the end, which is if you put your crypto or stock trading or option trading in your corporation, the worst case scenario is it's taxed the same way as it is personal. But the best case scenario, which is something that we need to plan and structure for, is to get the income from stocks, Bitcoin, options to be active income. And therefore, we need to make sure that your situation looks like a trader. You got to follow certain characteristics. I showed you before. I'll just quickly show you that again. Right here, frequency of transactions, period of ownership, knowledge of securities, right? You basically have to convince the CRA, if they ask for it, is to show them that you are treating this as a business. If you're treating trading as a business, and there's many ways to do that, and that's a discussion that we can have. then you can have the active rate. So the worst case scenario is if it's in your corporation, it is treated the same way as personal. The best case, lower tax rate, more deductions, blah, 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 right? And besides, your corporate, you guys mostly have corporations, right? So if most of you guys have corporations, why would you take the money out of your corporation and then be taxed on it and then trade? Why don't you leave it in your corporations or leave it in your corporate structure and then trade? So you have more money to trade with because you're not paying taxes on the withdrawal of the money from your corporation, right? So that's another argument. How do you put trading in your corp? Do you just open up an account under your business name? I don't remember seeing that option when opening up brokerage. Yeah, many clients have done that. And so, yeah, you basically open up a corporation, a trading account in your corporation's name. So yes, you can do that. How easy is it to transfer crypto that is bought in your personal name into your business? I think we can do something about that. But the easiest way is just simply all your future trades go to your corporation, or you just sell the Bitcoin, and then you buy it. The transaction costs are low, right? Time flies. Crypto records. So as the CRA says, here's the important thing that you should understand about the CRA. What they want is adequate books and records. So if they come knocking on your door and they're asking you questions, you make sure that you show them a nice set of books and records. That's the key, right? One time we had a client where the CRA is asking for, membership, the Keyspire fees, right? And that sounds scary. The Keyspire fees, membership fees, looked like they wanted to do an audit. All they wanted was the breakdown. They said, give us the, the general ledger breakdown of your membership fees. That's all they wanted. They didn't want to see the receipts. We had another client who was being audited on the personal side for meals and entertainment. And they wanted a listing of all the dates and blah, blah, blah. Dates, amount, where did you go, why did you go, all the meals and entertainment. That's the scary deduction, because a lot of the meals and entertainment is in a risk area where clients may not be using all of that for business purposes. But we handed the CRA that list. Good enough. Do you think the CRA is going to really blah, 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 blah? Anyways, keep adequate books and records. Okay, so if you have a nice accounting system set up, bookkeeping system set up, that's the key, right? It's difficult enough for you guys to track it, whether it's stocks, options, or crypto. It'll be 10 times more difficult for them to track it. So if you have a nice spreadsheet that shows it all laid out, that's going to be very important. Very, very important. Okay. The truth is not always what matters, as a lawyer once said to me. Going to the courts is not trying to figure out the truth. Sometimes what looks good is what they believe. Okay. Yes, this is a good question. Andrew, can you please provide an example, frequency of transactions and period of ownership to be treated as business income? Well, that's the exact thing that we want to talk to you about specifically. So I think there's no set amount. There's nothing to say, just like same thing with real estate, right? It's not like you buy a property, you live in it for 4 months, it's principal residence, and then you can sell it. There's no set. It's required. It's basically on a case by case basis. Right. And so long as you can construct your case, Andrew, that shows that you are a serious investor, treating trading as a business rather than a side, on the side type of thing, then it will be considered income. And look, if you have a corporation, let's suppose you have a corporation that's dedicated for stock trading. That's a good sign. Who would open up a corporation just to trade stocks if they weren't serious about trading stocks? Right? So having a corporation, and this is what I always say to clients as well when they call us, is why is a corporation less scrutinized? We have many clients, and when the CRA calls us to verify something for our client on behalf of our clients, they're calling for the personal side. That's the risk item. So structuring, planning, tax planning, the greatest plan, the greatest structure is simply to have that corporation. Because personally, I've never seen the CRA call and review anything on a corporate tax return. They only call for corporate tax return because the incorporation date was not right. The incorporation date was after the start date of the corporation, this kind of stuff, right? We get calls to the CRA every day. And by talking to various agents of the CRA, we get a feel for how they think, how they work, and what they're looking for. And so this is a good question. Andrew is saying, give me the number of transactions. What do I need to do? What is that rule? There is no rule. But if you have a corporation dedicated for stock trading, you got to be serious. You got to be serious, right? When the pandemic hit, the government of Canada basically said, do you have a corporate bank account to get the CEBA loan? Do you have a corporate bank account, right? If you have a corporation, that's fine, but did you have a corporate bank account? Because if you had a corporate bank account, that means you're probably serious, even though you got to pay $12 a month for that monthly banking fee. At least if you had a corporate bank account, it shows that you probably had a legitimate business, right? So something as simple as that is a good indicator that you are in the business of doing what you're supposed to be doing. Time flies. Had a bunch of questions there. So anyways, the bottom line is, like the client said, invest in stocks and options and crypto is interesting because unlike real estate, it is divisible, right? Real estate is 1, 2, 3, 4, 5, 7 or 8 properties, but stocks is very divisible. It's very liquid. You can sell it just like that. You can make very fast money. And if you looked, I was looking at some of the charts, and I was going to show you the charts of stocks versus real estate. And real estate has done well, and everyone likes real estate. It's a great story, and certainly we're cheerleaders. We're very happy for all of our clients have made a lot of money with real estate. But believe it or not, I think stocks have been doing better based on the past. Nothing to say about the future. We're not here to give advice. We're just here to give you some facts and perspectives on what's been happening, not what's going to happen. Okay. Cindy, I have a corporation, but it's not for trading. Can I open a holding company for trading, or is it best to do it totally separate? Always better to do separate. Always better to do separate, right? It's better to have a corporation than not to have a corporation. It's better to have more corporations than less corporations. It's always better to do separate, but you have to balance it out with the cost benefits, right? What's the cost? You got to incorporate and you got to file the taxes. George, is dividend tax in a corporation different in a corporation as it is in your personal name? No, the recipient, if you receive a dividend, it's the same.
Passive income is highest marginal rate in the corporation, right?
If your dividend, the dividend that you receive is because you are a trader, it's the same. But if it's dividend received as an investor, so if your corporation is not in the business of trading stocks, then it will be taxed at the passive rate, which is the highest tax rate. So the bottom line, we'll say it again. Hopefully this gives you some more perspective of the options that are available to you. Could you repeat information on T5008 and moving average costs? Sure, that's very important. We don't, although the T5008 is triggered every time you make a trade and the CRA gets those transactions, what we're saying to our clients is get a spreadsheet going to calculate yourself or through your brokerage, if they have it, what the actual capital gain is. Because you're buying shares and then buying more shares and then selling some and then buying some, your average cost base is always moving, and so you have to have the moving cost average. So all that means is you're always calculating your average cost. You're always calculating your average cost. So simple example, you buy 100 shares of Facebook at $300 each, your cost base is $300. You buy another 100 shares of Facebook at $500, now your average cost is $400, right? So you buy 100 shares at $300, your cost base is $300. You buy another 100 shares at $500, your cost base is now $400. So when you sell the shares, you're selling it, your proceeds will be subtracted by the cost base to $400. So you're always calculating your average cost. Send me an email. It's very simple. I can elaborate that. Jean-Vier, I've been buying Bitcoin for the long term. Good. So you're an investor. It'll be capital. Is it better to sell and open a corporate account and buy it? Under that case, like I said, worst case scenario in a corporation, it is going to be the same as personal. But like I said, if you invest it through your corporation, you are investing it with before tax dollars, because when the money comes out of the corporation, it's tax. So if the money comes out of your corporation, you pay tax and then invest, you got less to invest with. If the money stays in your corporation and then you use it to invest, you're investing with more. Do you have a resource for opening a corporation? We do it. We are the resource. We are the resource. So we'd love to help you out on that. All right. That was exciting. Like I said, there was every time you do these things, you have a whole bunch of notes and all that kind of stuff. But you never get to it. Let me just take a quick look. The one thing that you should be clear about with the CRA is you've got to maintain consistency. CRA, what basically the CRA is saying, and it's got, there's all these pages of it that I could have looked at and showed you. But the theme of the CRA, keep adequate books and records, be consistent. We're fine with you doing it this way so long as you stick to it. But when you start jumping around, then you get problems. You raise red flags. However, if you change because circumstances change, of course you can do that. No problems there. So Sunday, 1 hour. Hopefully that helped. Again, this is not designed to give you a lesson on anything. It's not designed to teach you about options. It's just designed to show you some things that are available, things to think about. What have our clients been doing, and what you may want to do in the future, whether you have been trading or have not been trading, about to trade, or have been doing well in it. Will you have a session on real estate investing, selling, capital gains? Trevor, we've had a bunch of, we've been having a bunch of real estate sessions already. So we're happy to send you the links if you haven't. Send me an email. We'll send you the links of the 2 latest webinars we've given on real estate. Very informative, very informative. So, okay. So the best thing is, where can we get coaching on option trading? It's out there. If you want our firm to teach you about it, we're happy to teach you about it. We can teach it to you. But it's out there. Okay. My email is, I'll type it in here, alan@realfile.ca. There it is. But yeah, we're happy to explain. We can explain almost anything. If we don't know something, we'll figure it out. A naked put, if a naked put transaction is split between financial years, should it be reported? A naked put, sell and then buy. Right. This is where you get a lot of flexibility, Andrew. You get a lot of flexibility here. So if you have a naked put and if it expires in the following year, therefore there is no realized gain or loss. So therefore it does carry forward. So it doesn't split. So no, it doesn't split. If a naked put is split, if it is split, I don't know what you mean by split. Do you mean expires in the following year? You sell in December, buy in January, then you record it in January. But if your put is making money and you have a taxable position in December in that year, you might want to realize that loss, right? It all depends on the situation. But in general, Andrew, you will report it in January. So we'll continue the conversation via email. Just send me an email and we'll continue the conversation. Thank you very much. Happy Sunday.